And we're back with episode 40-something of Punch Card Investing. It's good to be back. Sorry about last week, everyone. We had too many people who couldn't make it to our little Friday night or Saturday day meetings, depending on where you are in the world. So sorry about that, but we're back. And boy, there's been a lot just in the last 2 weeks that's happened. We have the obvious crisis in Ukraine. Among many other things all over the world, and plenty of companies going through some pain right now with especially in the value space, at least when it comes to their stocks. Lots of things to talk about, and we'll try to make this maybe a bit more question focused, just to hit whatever topics you guys want to hear about, because I mean, it's kind of hard to narrow things down right now because of how many things are going on. So before we get into anything though, be sure to smash that like button, subscribe. Check out all the stuff in the description below, including an affiliate link that we have to ShareSite. And that's the tracker software that we're using for the punch card portfolio, which has seen better days in its short life. and if you guys want to check that out, you can get some free months when you sign up for an annual plan. So go ahead and check that out. But let's see.
Jack, should we open up the punch card portfolio?
Yeah,
should we? That
why
sounds
not?
dangerous.
Let's embarrass ourselves a little bit. Why not? Open it up with some humble pie.
Well, we're long-term.
We've got a 5-year time horizon.
Yeah, exactly. We have a 5-year time horizon.
Oh
We're
my
in
goodness!
deep value territory. So.
Oh man, we looked better days ago. All right, here we go.
This reaffirms my decision to not check on my portfolio all that often.
we had a few that I think wasn't Prosus flat like 2 weeks ago. I'm pretty sure in this portfolio.
Yeah, Prosus fallen like 35-40% in the last 30 days. So.
Turtle Beach and Baba were both, I think, around negative 20 to 25%. And Serritage was actually way below this. So Serritage just had a great couple of weeks, and it's still down 30%. Meanwhile, KPG pulling weight as per usual. So it's been a brutal half year now almost. I think we started this in October. So we're
you guys we need to start we need to start an insurance company as part of a punch card here, so we can invest the float in times like this, right?
And lose half of it.
We don't lose money to inflation. We lose it to Prosus. And
yeah, we just.
I guess I'm more comfortable with that.
Yeah, yucky. Oh boy. So
even the currency is trying to pull down like KPG, but KPG is just like nope. Just
yeah, KPG just keeps trucking ahead. It'll be interesting to see what happens. First off, if we get any changes, I imagine we will, given all the volatility. I'm assuming we'll have a bit of a shakeup at some point with the portfolio. We were thinking about Facebook / Meta, which we had a vote on a while back, and the price continues to fall, albeit a lot slower than before. And that could get into our kind of group wheelhouse price, perhaps. And that would be interesting to get a first vote going. Or we might leave everything as it is. But anyways, that's ShareSite. We have our link in the description. ShareSite.com/punchcardinvesting. So check that out. You can open up a free account to check it out as well before you go ahead and pay for any of the premium services if you want to use that. But the free account gives you a lot of features too. So what should we start with, guys? Maybe some Serritage, because they've had some news recently and they've surged on that news. We've talked about them a number of times before. That sound good?
Yeah, where are they at today? Price?
I think they're like $11 or so, 10, okay. 11.
Up above 11, I'm pretty sure. Let me pull up their ticker. What is it?
Exactly. Like, if it would get low enough, you'd be interested in buying into the company. So, did you buy into Serritage?
No. So I sold one put when it was at it was on Monday. So right as it popped, I think 10 or 15% on the news that they were were potentially looking for like a merger partner or something like that, or just to get taken private. So I was thinking about opening up like a pretty significant short put position. And I only had enough money in my account for one. So I was moving money over, and as I was moving it over, it just surged, and volatility is still high. So option premiums are pretty decent, but I decided just to wait a second because it just ran away from where I would have done it. So it went too fast for me. But I am interested in it, and every day that goes by, I thought the put strategy would be a decent way with options premiums where they're at, to get some exposure to it, and seemed like a decent way to potentially get into the stock at an effective discount if it were to continue falling. And if it wasn't, then you can get a nice options premium in the meantime. So that was my thinking there. And I have one $8 strike put option for January 2023. So made like $130 or so in premium, and we'll see if that holds up. And if I get assigned, then that's $800 of exposure to Serritage. As of now, we'll see if that changes.
It looks on Tuesday, they put out a company release, right, announcing Eddie Lampert retiring from the board. And I just want to read one little section here. I encourage and support the board's efforts to explore and pursue strategic alternatives to enhance shareholder value. I have decided to retire to allow additional time to focus on my other investments and to provide me with greater flexibility to explore alternatives for my investment in Serritage, which could include participating with parties that may be interested in acquiring certain of the company's assets and trading shares in open market transactions. So that's one kind of snippet from that release.
Yeah, we got kind of a few items from Serritage just over this weekend and into this week that's kind of caused things to go kind of crazy. I mean, we had the decline over the last year. I was going to say over the last month,
right?
Yeah, but it's been significant. And then just in the past few days, it's gone from as low as about 8.5 up as high as 11.5 just in a couple of days. So very very volatile right now. I have to pull Jason's comment here. Is there any way to short the punch card portfolio? I mean, you could do it on your own time, but we don't have any sort of
I think, Jack, the link that we were going to send to Jason kind of got lost, right? I think.
What's that? You
were sending the link, right? I think it just got lost. You were going to have him on the show, but then maybe the link goes.
Yeah. I canceled the link to allow Jason onto the show. We're revoking his pass. He can't come back on. Anyways, a lot of price movement in Serritage, even just in the last few days. It's been kind of a roller coaster ride. We saw Monish Pabrai selling out pretty recently. That was like a couple of weeks ago that we learned about that. Then we have this merger talk in addition to Eddie Lampert officially retiring. Plus we have like some sort of lawsuit speculation that this, as part of like the Sears breakup that allowed Serritage to kind of be spun off with all the real estate. Maybe there's a potential that Sears effectively has a claim on this real estate or something kind of crazy like that. There's some threat there that is a potential thing, but there's just a lot going on right now with Serritage that's pretty new.
Yeah, even since Monish sold and then transferred that stake into Prosus, I would assume, like Prosus has fallen 40% since then, and Serritage has gone up 40% since then.
Monish is he's a bad trader.
Even the super investors can't time the market. It's just
And it's been, and then of course we have the overarching and just macro concern of the conflict in Ukraine, the potential logistical terrible problems with that. Commodity prices are soaring in many areas, and specifically with oil. If oil prices go up, that would theoretically cause things to go up more than just oil. Everything pretty much to go up because everything runs on energy. And we've already seen bad inflation, so maybe there's some policy decisions that come from that, but lots of craziness. And plus it puts pressure on our friends over at the Federal Reserve and all the central banks to keep interest rates low to navigate any sort of crisis. Yet at the same time, they want to combat inflation. So it's like, we're getting into some trying times on the monetary front, it would seem.
Yeah.
What are your guys' thoughts on Serritage potentially going private. I know Tom put out some content recently about this very topic, potentially Serritage going private, and talked about how Guy Spear saw this as like the big risk was them getting taken private and not allowing this potential value in the portfolio to be unlocked through all the things they're trying to do during however long it takes.
Yeah. So, Brad, when you did your valuation property by property, what sort of value were you getting for Serritage, approximately?
Yeah, I think it was in the low 3 billions for the property values, all aggregated.
Yeah. So that's like a 4x, 5x from current prices.
Yeah.
Yeah.
Do you guys see that the possibility of it being taken private at, say, a 3 billion sort of valuation? 2-3 billion?
I'd be kind of surprised, but I don't know who would be trying to buy it. Have we had any indication on that? Like, has anyone proposed any sort of offer?
There's only one company that I know in the public markets that has like 2.5 billion sitting in cash. I'm still hopeful.
The Chicago company we've been talking about.
After all these years, Equity Commonwealth's going to come out swinging and
Right.
finally do what Karan's been asking for and merge with Serritage, clear
the
the debt.
investor relations finally heard me.
clear the debt, deploy the cash. It is weird because it almost seems like Serritage just this to me is almost a signal of some serious like a lack of confidence from Serritage. Maybe not as serious as it could be, but in that maybe they're really worried about not being able to do some of these developments in time with their debt clock coming up, and they'd prefer to just have an injection of cash, sell out, go private, take care of this debt, worry about everything else later. I don't know if that's the first kind of initial vibe I got. I'm like, ooh, that almost sounds like they really need the cash to take care of that debt and remove that risk. But I could be overanalyzing that. They could just be trying to get out of this crazy volatility of the public markets and just take it private and take care of their projects over the next few years.
This is probably the highest rate that they can get for their properties, right? At current interest rates, because as interest rates go up, cap rates kick in, and then prices will obviously level out. So I think now is probably the best time, if they are liquidating, just get it done when interest rates are still relatively low. What are your thoughts on that, in terms of cap rates and all that considered?
It's definitely a concern, but I think the bigger concern right now is that they have a debt burden that's coming due, and I know they restructured a good portion of their debt, which was good, but there's a large portion that has not really been changed, so they need to pay that off. And unless Daddy Warren, who owns the debt, decides to change things again, which he might, but he doesn't really have an obligation to. So it seems like that's the overarching concern, more so than cap rates rising. But that is a concern too.
I don't see the debt as much of a concern, frankly, because they have like 800 million due in like July of 23, and the rest is due in 2025. So I don't see the debt as much of a concern. Like, they could sell properties and cover the 800 million.
Well, they don't want to sell them at too big of a discount because they also have the ongoing redevelopment costs. It's not as though it's just, these properties will automatically reach their potential value. There's some serious costs going on too, and cash burn that way beyond just your typical interest costs. So that's kind of the added wrinkle that's a big thing that's had me not really taking any big swings at Serritage, just because it's more than just paying down this debt. In addition to that, you have cash burn from the redevelopment costs. They need to actually execute on these redevelopments. And then we can talk about, okay, now they've unlocked that value. So there's risk beyond just the debt clock too.
I think there's uncertainty. The risk would be the risk of permanent loss of capital, and I don't think that exists. But there is uncertainty. So yeah.
Well, how would it not be a permanent loss of capital if they've overpaid for a development, for example? That's cash down the drain, no?
Because they are entering to joint ventures, right? So again, they put up the building, but then
true.
the development costs are not on them. So
True.
the JV partner kind of takes on those costs.
Is that for all of
That's-
those major developments or only some of them? I know it's for some of them.
It's for some of them, but like they've kind of identified what they think are the properties where they can get the highest return on capital, and they've kept those for themselves, and the others go with JVs. So
Okay. Well, that helps that a bit. But in any event, they still got to execute.
I want to mention as well, Guy Spear, I guess he has a YouTube channel. It's fairly recent, I think. And he talked to Matt Peterson 2 weeks ago about both Serritage and Daily Journal. I found that an interesting talk. So check that out on YouTube if you guys haven't seen it.
Let's get this question from SC358. Have you done any work on the litigation aspects? Not yet. I think if the price is back down closer to 8, I might be looking more into that. But this is interesting because apparently
with the Sears litigation.
Yeah, because it's part of like the Sears. I don't know what the lawsuit is exactly because again I haven't really looked into it too much, but it's part of the bankruptcy, and Eddie Lampert and ESL are like a party against Sears or something like that, and it's alleging some sort of wrongdoing in the way that Serritage was spun out of Sears or something like that.
Right, like Sears shareholders didn't get their fair share,
right,
as these assets were spun out.
Right, and I don't know how legitimate that claim is. If there's a potential settlement that could come out of it, I'm not really sure what that looks like, but it's something, and apparently some people have paid some attention to it, so it's probably worth a look if you're interested in that.
Well, I think Danielle Town did some work on it as well. I think Matt Peterson actually hired her to kind of dig into some of the, I guess that was mostly the debt stuff.
For the debt covenants. Yeah.
The debt, yeah. So maybe it didn't have anything to do with the Sears.
Yeah, that's a relevant consideration too,
yeah.
But it is separate from this litigation issue. I think I first saw it when I believe it was SC358, yours truly, who came in the punch card Discord that we have linked below. I think you were the first who shared it and were asking about this, and it's an interesting sort of risk because this could definitely result in some permanent loss of capital. Basically, I don't want to call it a fraud, but it would be some sort of wrongdoing that shareholders would be holding the bag for to unwind the wrongdoing. If something like that were to actually go through. Again, I don't really know what the real risk of that is, but it's something.
Yeah, I think I heard from Monish at one point that he was really waiting for that risk to pass. And that's kind of why he was able to dive in March of 2020, because he thought, all right, this thing is closed at this point, the risk from Sears. So
it seems like it because it's been a few years. Was it 2017?
2015 that got 2015. Spun. So it was 5 years.
So so it seems like it really wouldn't be an issue, but I guess it's slightly lingering still, as far as I know.
So let's talk about the other holding that Monish got into when he got out of Serritage.
Trader Monish. Day trader, swing trader. Oh, and just in time to join us to talk about Alibaba, the other holding that recently had earnings less than stellar and proceeded to keep going down as it has been for the last.
Who is it, Jack?
However long. Well, it's our very own, our friend, Jason, the afternoon investor. Jason, how are you?
Hey guys, doing great. How's everybody doing? Thanks for having me on again.
Yeah, thanks for joining us on short notice. So cheers to Jason. A quick makeshift super investor sip. But Jason, we're just about to dive into Alibaba, which has they just had their earnings call. Growth was not huge, but Ali Cloud continues to grow. Certainly some catalysts for future growth as well.
Buybacks are good.
But buybacks still huge. What are our thoughts on Baba right now?
Jason's out of Alibaba. He's not in it anymore, is he? Okay, he's out of the chat.
He's out of here. He's just out of here forever.
That was too personal a question, Karan. Oh, he's back.
I'm back. My thoughts on Alibaba, is that what you're asking?
Right.
Yeah. Anyone.
By the way, is my audio's okay? You guys?
Yeah, you sound good.
Yep.
Great. Okay. I mean, I'm out of Alibaba. They put out their earnings, and it did not make me want to get back into Alibaba. And then, of course, everything's going on in the markets, and they're down this week another 5%, and it did not want to make me get back into Alibaba. I've got a rule for getting back into Alibaba. If I see customer management growth, Taobao and Tmall, where they make their money, I'll consider going back in. But until then, I'm not really enthused about the company. Ant Financial isn't Ant Financial anymore in my eyes at all. And their core business where they make their money, if I understand it correctly, Tmall and Taobao customer management under China Commerce is not growing. I think it shrunk like either 1% or I think it shrunk like 1%. So I'm not bullish. Sorry to ruin the party.
I'm curious, what is your sense of what Charlie's seeing in Baba that you're not seeing, Jason, if you have any take on that?
Honestly, this week I was thinking about Charlie Munger and his investment in Alibaba. And I'm not going to it just feels weird to say mistake Charlie Munger, because we haven't seen him make many mistakes, but I honestly am considering possibly it might have been a mistake. Or maybe it even wasn't a mistake. Maybe just the market changed on the company, but I don't see them as really a big growing company right now. I'm worried about their competition, and if he was buying it at like over double the price, I don't know if that's a good buy. So I've been thinking a lot about that. But I think we have to, even though he's our hero, one of our heroes, and we have like the utmost respect and we learned a ton from him. There is possibilities that guys like him and Warren Buffett do make mistakes from time to time. So I'm thinking possibly it could be that, but I don't want to be the one to say that. So.
But it's only been like 1 year since he's started a position. So that's barely any time.
He's also bought a lot more recently, relatively speaking.
If he's made a mistake, he's really doubled down again. So
yeah, I like at his annual meeting, one of the first questions that I think it was Becky Quick, she asked, some shareholder was like, you're buying foreign stocks on margin. Are we allowed to know what you're buying? And he thought about it and he was like, no.
Yeah. He says, we don't want people to know what we're buying.
Okay.
How candid.
Brad, the one thing that always comes to mind, though, when I think about Alibaba and Charlie Munger is Li Lu. He's so close to Li Lu. I just infer that if Charlie likes something, Li Lu likes something. I don't know if that's fair, but I'm more curious about if Li Lu also likes Alibaba, what he sees in it. But of course, we haven't seen it show up on his 13F. He could own it through Hong Kong, so who knows?
Right. Yeah, Li Lu's got to do more of these Q&As, man. He does one like every couple of years. It's just not enough.
Yeah, there's no way we can find out if he has the Hong Kong listed shares. So
no.
Oh.
Now, what about you gave a pretty bearish take on Alibaba there, Jason. Is it that you're actually bearish on Alibaba, or just that you're more bullish on something like a Tencent or something else?
Well, it's kind of the Facebook situation where it's like, obviously they're a very strong company. Obviously they've got a huge thing going, but so I don't want to necessarily say the words bearish, because that would be like me making a prediction. And it's more so like, oh, I don't think I can make a prediction or judge the situation anymore. I'm seeing things that worry me. A lot of competition, and their core business where they make money, they're not growing. As of like last quarter, year over year, they actually shrunk a little bit, but that's not growing. And that moves it from where I thought it was a year ago into more of a too hard pile to, I wouldn't feel comfortable owning this thing for 10 years if I couldn't sell it. I don't know what's going to happen with their competition. They also don't seem to be the favorite company of the people in charge over there. And that also,
the regulators.
The regulators. It plays a role, I think, when you're investing in that country. A lot of negative news around the company. So
true.
I noticed a comment from Luis. Maybe you can highlight this one, Jack. So I haven't seen this personally. But it looks like Seeking Alpha compared Baba
I saw
to
that
the
headline.
salad salad oil scandal from American Express. So
Yeah, I remember seeing that headline.
If you
You
guys
do?
ever want to like learn headlines and copy and like marketing,
Seeking Alpha's got it down,
yeah,
huh?
just go to Seeking Alpha, because those people know how to use celebrity investor names and things that trigger emotions in people. I saw that today as well, and I was like, I'm not even gonna. I mean, what are you talking about? Salad oil, like that was
Right.
fraud, you know? And this
Right.
this is not that. So
I will take a look at their headlines. Thanks for
well,
that.
look at us.
for
It
that
made
tip.
it made it onto the show. So there you go. It worked.
You know, the most
Um,
recent comment about Tencent being a superior business, I think there's a lot of truth to that statement. Like in terms of Tencent being the superior business compared to Baba.
I definitely feel like they have less direct threatening competition.
Why? Because they invested in everything? Is that why?
yeah.
Just because they're more of, as I understand it, they're more of like an iOS platform kind of business with WeChat, more like you're saying, all encompassing, versus Baba, at least their main business, e-commerce, and it seems like they've got competition in that space.
Yeah, but I mean, the way Baba's running the entire business, the capital light model sort of, I don't know, it makes a lot more sense. And for the valuation that we're getting Baba at, seems a lot cheaper than Tencent, no matter how you look at it.
And don't forget about Ali Cloud as well. That's a huge growth
Absolutely.
engine. And a lot of people
20%, up 20% last quarter, year
Again,
over year.
that's just one quarter's result. So, like, I mean, if we're going to be basing, I mean, we're not buying now just to sell in 3 months, right? So,
true.
Yep. Yep.
yeah.
A lot of
But,
people are putting a lot of faith in the growth of Ali Cloud, which seems fair so far. The question is how far can it go? Is it going to be like another Amazon sort of deal where it becomes like all the profits of the business, or what's that really going to look like? It's a little hard to say.
I think they lost one of their biggest customers recently. Douyin. Duo. I like to call it Duo Yuan, but that's not the way it's pronounced.
That's fine.
But yeah, I think they dropped off of their cloud. Jack, I know you love talking about Alibaba, because I remember I think there was a lot of pressure on you from this group. Everyone was in Alibaba, and you just didn't want to do it unless you're in it.
No, I had like a tiny bit. I copied Ray Dalio like years ago. I put a little bit in there, so I had like a
Nice.
tiny bit of exposure, and I've slowly built it up as it's fallen down to 100. I think my cost base is like 140.
So I take that back. You are getting into
Yeah,
this.
I think it's about 5% of my portfolio, of my stock portfolio, that is. So
Wow.
Nice.
Well, that makes sense because you have about as many holdings as Ray Dalio, don't you, Jack?
no, not even close. Ray just owns everything. But he was putting a bunch of. It was actually, I think, right before the pandemic. Was it right before? I think it was. Or no. I don't even know. He was putting a lot of money into China. It might have actually been during the pandemic. He put a lot of money into China, and Alibaba was one of the biggest swings he took.
He's bullish on China.
Yeah, he's very much so. That was a while back though.
Can I bring
You
up
know what's
Prosus?
I was going to talk about Prosus too. Yeah, I mean, it's one holding that's really surprised me over the past month, because I never anticipated that the entire Russian-Ukrainian investment would just be like all the way down to almost nothing. Like, is that a risk that anyone had anticipated?
No.
Not at all.
And I do kind of wonder. I do. It's very hard to say what it is, but with the whole conflict between Ukraine and Russia, any Russian holdings, anything that's tied up in all that, I wonder if any of this is an overreaction. Now, of course, it depends on the escalation of conflict and what this actually ends up being. But some companies have literally gone down to zero, or almost to zero. Which is that really justified? Like, there's still a company there, and even if sanctions are brutal, is it really worth zero, or close to zero? And then I do wonder if there's going to be some opportunity that comes out of this. Surely there'll be something, but we need the dust to settle quite a bit first to really know that.
Jack, pull up the price chart for Prosus real quick.
Even if you look at the underlying currency, I mean, I think Jason and Brad, the Turkish investors, can tell us a bit about this. But like, when your currency is kind of crashing,
Ruble's down like 90% against the dollar now, or something crazy.
How so in terms of currency risk, is that
That's
something
interesting because I know the Russian central bank bought a ton of gold over the last couple of years and was trying to de-dollarize. So it's interesting that it still dropped as hard as it did. Granted, there are valid reasons for as to why it's dropped, but it is interesting how violent some things have been. Right, Prosus.
Did they buy Bitcoin as well?
Probably, who knows? Definitely a lot of gold though.
I just noticed something interesting that for the past 5 years, Russia has been like the largest gold buyer in the world.
Gold buyer?
Gold buyer, yeah.
Oh, gold. I think they said coal. I'm like, really? I thought they're an
Gold.
energy exporter. Yeah. And I believe you're correct on that.
Wow.
Here is. Wait, it's Pros.y. Yeah.
Yeah, I got it
PRX.
pulled up. So Prosus is down 38% year to date. And what's interesting is Tencent is only down 13% year to date. So Prosus is down a lot more than Tencent. I was running the numbers today. If my numbers are correct, Prosus is 73.5 billion. Their 10-cent stake is 143 billion. So just the 10-cent stake, you're down to 52 cents on the dollar. Ran a few different scenarios, but it's getting a pretty big discount there. But yeah, just on 10-cent, you're at 52 cents on the dollar.
Wow.
The Prosus can't catch a break. First, they have the South African index pushing them down. Then they've got Tencent. Now they've got the Russian investments.
Well, they've been doing a ton of buybacks recently, right, Karan? I wonder how much gunpowder they have left. They finished that.
Yeah.
But they have an additional 5 billion that they've issued in bonds. So if that goes towards buybacks at these prices, it's fantastic.
Yeah.
Speaking of buybacks, one thing I will say, just because it's one of my holdings, but Foot Locker recently had earnings that were less than stellar because of in short, Nike is trying to move to direct to consumer, which would hurt something like a Foot Locker, which relies a lot on Nike products. But they just approved, Foot Locker did $1.2 billion in buybacks. I think the company's worth
what's their market cap?
I think you're just over 2 billion or something like that.
Is that right?
Yeah. So insane buybacks relative to their new market cap. So keep an eye on that one.
We might be using insane, both of us using the word insane, but for different reasons.
yeah, maybe so.
How much cash do they have? What's their net cash position right now?
I think they have right around $1 billion, but let me check real quick. Don't quote me. Yeah, they are. They've been doing pretty aggressive buybacks over the last couple of years, but this is like next level. So I'm interested what's going to happen there.
Do you know what's happening with stores, Jack? Like, are they closing stores? I can't imagine.
They were slowly closing off some stores, but same store sales are actually up slightly, so that's good. But it's really more this kind of long-term threat of Nike pulling away. How much is that really going to hurt all wholesalers? Talking about like Dick's Sporting Goods, Foot Locker, whatever it is. Anyone tied to Nike products is obvious. This is an obvious threat. And they have a decent amount of debt, especially just between all their store leases. Like that's a significant obligation. But yeah. But otherwise, it is surprising that same store sales are up still, even in this environment. Now, how much that will be maintained through the next few years, that's the question. But if anything, and you can get it if you can get it at the right price, it still can work, and that goes for pretty much any stock, unless one is totally insolvent. Then good luck with that.
I vaguely remember Jeremy beating the Foot Locker drum a couple of years back when I was kind of paying attention to what he was doing.
Is that right?
I think so. Yeah.
I think he was in it like 2 years back or something.
Yeah.
Where was it 2 years ago? I'm curious. Let's see. So it was at. Okay, so it looks like he wrote it up.
Well, we don't know when he got out, but yeah.
Well, yeah. Here's what it looks like. 2 years ago was around here. So he probably got in the 20s. Like at worst, he's getting out above that. So theoretically.
Jack, can you open the link I sent you in the private chat there?
Sure.
I mean, this is too good. What Seeking Alpha is doing. We just need to take a moment. Look at that second headline. It is incredible. Jason, you got to pay attention to this as well.
That is pretty good. Wait, hold on. Let me get out of my I don't want all my email addresses to show. It's asking me if I want to log in. There we go.
What's the second headline there?
Why I sleep like a baby. Oh, sorry, let me zoom back out. That's ugly. Why I sleep like a baby. 3 ultra swans singing great lullabies. These are great.
Wow.
Ethereum is losing, and I love it.
I like
not
the
to trade Lukoil.
I like that PayPal offers rare asymmetric growth opportunity. I like the use of the word asymmetric.
Rare asymmetric.
Asymmetric is a buzzword, kind of like a shared economy, whatever.
Scaled. Yeah.
It is.
Yeah.
It is.
Right.
If you can get an asymmetric bet in a shared economy scale,
Oh, that is
yeah,
the
you
sweet
got to go
spot.
all in.
Yeah. Push in the chips. So let us know, guys, if you have questions in the comments or just a topic to riff on. We're going to spend most of the time tonight doing that. But anybody else have anything you guys want to
I
bring up?
know you guys. I think you were talking about Serritage already.
Yeah.
Is there a number? Is everyone in Serritage?
No, I have my one put option I mentioned at the top of the show. That's it.
Jack is the contrarian. You know, he
Right.
just goes against.
No, I sold a put. It's bullish. It's a bullish position. So
What's your price where you would have to buy it? And by the way, Jack, I liked your video. I was at Cane's Chicken in the drive-thru on my way to get a caniac, and I had your video playing in my car.
What is a caniac?
like someone eats Raising Cane's.
All right.
No.
I'm picturing it's a type of meal from.
No, I'm
Cane's
kidding.
Chicken.
Okay, yeah, it's their big meal. It's 6 chicken fingers, piece of toast, coleslaw, and dipping sauce.
Beautiful.
Yeah.
Well, thank you. I appreciate that, Jason.
Yeah. No, it was. I was learning and
for the Serritage one, right?
Yeah. What's your price that you would have to
So
buy
it was an $8 strike price. And when I did it, it was the morning of that video, but I filmed that video on Sunday. So the stock price over the weekend was at like 9 something, and then it was well over 10 by the time I did the option. But option prices were still pretty high. So I was able to sell one for like $130 on an $8 strike price. So that would bring my cost basis down to $6 and something. It's like $6.40 or something like that. If I were to buy in, my effective cost basis.
That's pretty good. That's less than Monish, I'm pretty sure.
Yeah, that was kind of what I was thinking. I'm like, this is, I'd be comfortable like this low in some capacity, but I only had time to buy one option before it just ran away up above 11 again. So,
well, let me ask Brad and Karan, and apologies if you answered this already, but let's say on Monday we get an offer for $18 a share. Would you vote yes or no?
Nothing below 30.
Okay.
all going all the way.
Yeah.
That sounds good. I'll hold firm at 30 as well.
So you both would vote no.
Mm-hmm.
Wow.
Yeah. It wouldn't even be I think a consideration for most Serritage shareholders, anything below like 25.
Well, that's what I said this week. I said it's a very stubborn shareholder base that knows what they own. What do you guys?
Hey, hold on. It can't be that stubborn. It's all the way down to 11. It got as high as like 20 a while ago, right?
Well, Monish is moving the market, right?
Yeah, true.
What do you guys? Do you think they're gonna? If someone makes an offer for the whole company, what do you think it'll come in at?
$3 billion.
I'm still hopeful for that equity Commonwealth kind of swoops in and does a merger. I'm still hopeful.
I like the sound of it, but I don't see it. I don't see it.
It's perfect. They have the exact amount of cash that Serritage needs.
Except Sam Zell does not like development, and he does not like retail, and that's all you got in Serritage.
He also said that industrial is super expensive, and then he went and
This is
put out
also
a deal
true.
for
This is
more.
also true.
So I think he buys deals. He doesn't buy, doesn't matter what it is. If it makes sense at the right price, he'll go for it.
True,
And Serritage
but I know
is at the right price.
he's very much against development, though. He prefers to get something below replacement cost, as he likes to say, if he can do it. And this is kind of the opposite. He's becoming a developer, so in retail, which he already doesn't like. So there are multiple factors against it. Maybe he would. I'm not saying he wouldn't, but it's unlikely, it seems.
Interesting.
Jason, are you going to the Berkshire meeting this year?
No, I heard I'm not. I heard a celebrity YouTuber is working on it. I don't know if that's public information, but a lot of cool things are going to happen, I think.
I
this
can't
year.
comment on it. I'm curious, anyone in the chat, are you going to the Berkshire Hathaway annual meeting this year?
Yeah, I was planning on doing it this year, but I have guess what time it is again. I have a wedding that weekend.
A wedding.
They're coming back, guys. It's almost wedding season again.
Are you going, Brad?
You
thinking about it?
It's a possibility. I haven't booked my flight yet, but it's a possibility.
I feel like this will be the first Berkshire Hathaway annual meeting in person since this YouTube finance thing has started. I think it was kind of a pandemic thing, and we haven't had an in-person meeting since then. So be a lot of fun for the people that are there.
Yeah.
Probably going to be a lot of self-promotion in the questions. trying to drop their YouTube names.
I'm a value guy on Twitter or whatever,
right.
Something like that.
Value bro.
Yeah.
Warren, why did you not invest in Alibaba? Be interesting if someone could ask that.
Yeah, I wouldn't be surprised, actually.
Yeah, especially since Charlie's double down.
Mm-hmm.
Although Charlie already got asked that at the Daily Journal meeting.
But that was to Charlie.
That one might get filtered. That one might get filtered out.
Warren would give a very political response just about how there's opportunities here. It's on Let's do something like that.
That sounds like Warren, yeah.
Everyone's going to be in a good mood because everyone gets to travel again, and then the price of Berkshire's way up. So going to be happy shareholder base.
Don't jinx it. There's been some brutal earnings recently.
Yeah, but the thing is, Berkshire makes money.
Yeah, that's right.
And what I'm realizing, a lot of these companies whose stock prices are crashing, they forgot that to be a company, you have to make money.
Fair.
Don't have to drop any names, but
there's
there's a lot of them out there.
A lot.
A lot. I mean, there really are a lot of them whose stock prices
are
absolutely crashing, and they don't make money. So what are they all doing? Besides cash and checks, and
that's it.
Yeah, pretty much.
There was a rush to the door rush to the entrance to go public over this record amount of IPOs. I'm pretty sure over this last year and a half. Certainly in dollar terms, it's massive amount of people, companies, many of them with no profits, just coming in to grab some cash.
Well, I imagine that's what happens at the end of every cycle, right?
Seems like it.
Euphoria.
Yeah.
Are we hinting towards Virgin Galactic? Is that what we're hinting towards? Like
space.
We're not going to name names. Sandeep, I want to get him. We don't talk much about Daily Journal.
Before we'll get to that. But here's this chart. Okay. Here's this chart from Charter. They have a really good free email I recommend doing. Recommend signing up for. Not sponsored, but maybe we should be. But here is the amount of profitable IPO or percentage of IPOs that have been profitable
over time. That's cool.
Yeah, and this is as of last year. So
2000.
look at that decline and notice the tech bubble.
Yeah, right.
So trends.
Interesting. And of course, what have interest rates been doing that entire
It almost looks the same.
Yeah.
It's almost the same graph.
Exactly. Cool. Thanks, Jack. So Daily Journal, it's funny. I've been digging into Peter Kaufman recently, and there's not much out there on Peter Kaufman. Peter Kaufman edited Poor Charlie's Almanac, and he gave a talk in 2018. It is phenomenal on multidisciplinary mental models. It's just so good. And he owns almost 10% of Daily Journal. I believe he's still on the board of Daily Journal. But I think Tom did a few videos on Daily Journal. It's hard to really, for me, it's hard to get my head around Daily Journal technologies, just because
They
it seems
keep
like
it
there's
obscure.
not going to be anything coming in for like 5 or 10 years, really. They've got such a long-term horizon with that. But if it's really sticky, right, it could be an incredible business. So Matt Peterson is bullish on Daily Journal. Guy Spear owns some, obviously. Charlie, CEO or not CEO on the board. So it's an interesting company. It's kind of been in the back of my mind. Have any of you dug into Daily Journal really?
I have a little bit. I look at their cash, I look at their portfolio, I look at the price of the company, but then I get to the point where it sounds like you got to, where you look at their core business,
right,
and you ask yourself, okay, is this thing going to start growing and work? And there's no way for me to know that, and so I just quickly move on. Interesting mental exercise is to ask yourself what you would think of that company if Charlie wasn't associated with it. To me, it kind of looks like a different situation, but yeah, I don't understand. I can't personally discount or put odds on them winning contracts from local governments all over the country and stuff versus Tyler Technologies or some company like that. Just no clue.
Yeah.
So,
Karan,
Doesn't Matt own 0.5% of the entire company?
maybe closer to 1%. Yeah.
Or is that with Serritage? I'm not sure.
That's with Daily Journal.
Okay.
Yeah. He's pretty excited about that. But,
I guess one way you could look at it is if it ever gets to a point where it's cheap enough versus their stock holdings, you could kind of look at it as like, well, I'm not going to get wiped out. Maybe I'll lose a little bit, but if it does work, then I'll have a huge win. Maybe people are looking at it that way. Or they just have more information of the legal software space.
It does seem to fluctuate quite a bit. Kind of goes between 400 and 200, it seems like. So, right now it's kind of right in the middle. Cool. What else?
I'm looking at some questions. Self-serving question, Jack. Have I looked at Homebuilders? Not really. I'm a little adverse to a lot of home builders because it seems like they ramp up their building at the top of cycles, which makes sense because that's when prices are high and you can justify some of the cost. So I'm always a little hesitant on that. It's not one I've really looked much into, though, despite my interest in real estate. It's development's kind of a different game than buy and hold real estate. Obviously, you're
too cyclical for you, huh, Jack?
Yeah, that's partially that, but it's a different game because it's a lot more speculative, and there's a lot more moving parts as well than just simply buying the property, maybe renovating it. It's all kind of there. Whereas with developing, you're building something out of nothing. You got government risks with trying to get entitlements, zoning issues, the obvious costs of your inputs, which has been a huge issue over the last few years. So it's a very different business than your average buy and hold REIT, for example. So not that you can't make money in it, of course, but it's not something I've done much into. Have any of you guys looked into home builders at any point?
Yeah, I've got a home building position.
Mm-hmm.
Which one? Called Green Brick Partners, and it's a big David Einhorn company. I think he's
seeing something about that.
Co-founded, or I don't know, it was his money, I think, in a large way that co-founded the company, and he partnered with a guy with a big background in the space. Interestingly enough, with the last name Brickman, I believe, and it's just interesting how that kind of stuff happens in life. But it seems pretty cheap to me. PE of 4 to 5. In the right places in the country, a little bit of Florida, a little bit of Colorado, and a ton of Texas, and I think Dallas, Fort Worth,
and Atlanta.
Atlanta. Yeah, that's the other big area where they're at. So growing areas, and the guy who runs it is just really. I just have a good feeling with him running the company. Really seems what they know. They know what they are doing, and it's interesting. They I think they even talk about Berkshire Hathaway and their company, the way they discuss their company, because they buy land and they have money, and that's kind of the core competencies that the management brings to the table, capital allocation. And then they partner with like local home building companies to some extent, or people who do home building, and they've got it's kind of, I don't know, not an outsourced thing, but it's kind of like a Berkshire thing where it's very losing the word, but it's a very not segmented, but they kind of let their local people do their thing.
Decentralized.
Decentralized, yep, that's the word. And it just seemed cheap. And the big impetus for me to buy it was how much it was growing, the PE, and then management and the board has been doing a ton of insider buying at similar prices. And so I've had about a 5-ish% position for about a year now.
It looks like Einhorn's fund owns 34%. So big.
Yeah, and he sold maybe a quarter of his shares a year or so ago when the stock price really popped up.
Okay.
And it's also kind of a supply demand play. It just seems like there's a lot more demand in that market. You read some of the stories. Been through it myself as a home buyer, home seller, and there's a lot of demand for home buying. A little bit worried with interest rates, but I'm just going to keep holding and see how the story plays out.
Yeah, there is a lot of data suggesting that there's a few million homes short of what the U.S. really should be at, just in the U.S. that is nationwide.
Yeah.
So that would seem to bode well for home builders, even if we get a decent bump in interest rates in the near future, assuming you believe those numbers. And it seems to be holding up given the incredible lack of supply in the single family home market right now compared to what it usually is.
Yeah, it's about as simple as it is. I saw an old Berkshire Hathaway annual meeting the other day, and Buffett was talking about home building, and it's, as he does, Buffett made something that's somewhat complex extremely simple, and he just talked about how many households are formed in the country every year and how many new homes are built, and then the supply and demand kind of drives that industry.
And input costs.
Yep. Well, it's interesting. You mean like the cost of labor and
labor, materials.
Kind of stuff? Yeah.
Granted, you can pass a lot of that on.
You can in markets like this. That's what they've been talking about for the last years. How their costs keep going up, but they keep asking for more money, and people keep saying yes.
Yeah, that's true.
Yeah, did you guys notice Yen Liao is closing up his fund?
I'm not familiar with him.
Okay.
Tell us, Brad.
Well, I'm trying to find the release now just so you can pull it up. But he's one of these kind of smaller, value funds that just kind of caught my eye because of the kinds of returns he's posted. And let me pull up my kind of investor spreadsheet to see how long he's been around. I'm guessing like 7 to 10 years or something. But yeah, it was surprising to see, he's closing up shop. So hopefully it'd be nice to hear from him a little more directly what's driving that. You guys don't seem to follow him. So.
No,
not at all.
You know what I'm thinking about, Brad, is one time I worked at CVS, and in the magazine aisle, they had like those teeny magazines where it's like you have those teen celebrities that then preteens read about. And I just picture you're kind of had that magazine with the with the small value investors. You got
that
keeping us up to date on the latest ongoings in the world of small value funds. Yeah. We gossip, yeah.
The teeny bopper investors, yeah.
You described that so vividly, Jason.
Yeah, that's beautiful. You really painted a picture there. What's Facebook doing, guys? Has it continued to tank? I've kind of
been hovering around 200.
Okay, hovering around 200.
I don't think it's dropped. It might have dropped below for a moment. Oh, it's right at 200 right now.
Yeah.
We know Jason's thoughts on Facebook.
Ooh, don't
Just
get him
great,
going, guys.
great company, guaranteed to grow at 20% a year.
Good.
Even if it doesn't grow at 20%, I think it's guaranteed to grow at something. And so, yeah,
My
screaming
goodness.
by,
Down
There you have
40% on the year.
Yeah, really.
Not even on the year, on the 2 months.
Did you guys watch the interview with Mark Zuckerberg and Lex?
Yes.
I think you watched
it? Is that recent?
Yeah, it's very recent.
It was a few days back.
I haven't seen it, guys. I have a really hard time watching him do interviews. He feels like a robot to me.
It's funny you say that. I mean, only because at the beginning I'll spoil it, but he gives him like Lex leads off the interview by giving him a paper and saying, "Can you please circle all the traffic lights?"
Oh, that's so good.
It was a really good way to start.
Love
great.
that.
Yeah, Brad. I haven't listened to many interviews of his.
Yeah.
I've seen like the famous highlights, like when he was a lot younger and he was on stage with that. I forget her name, but she's part with the New York Times. She's kind of like what you are to the small value investor. She is to Silicon Valley.
Okay, good. I like that analogy.
And she put a little heat on him, and he got a little nervous at that time. But I haven't seen any recent interviews. But my take was that he was very human. I don't know if it's like kind of.
What do you mean he was very human?
Well, yeah, I mean,
no longer is
compared to Zuck.
Well, no, I'm just saying. I guess he's got this reputation of like sounding like a robot in interviews or whatever. I wasn't aware of that, but he came off as very just like kind of normal fellow dad kind of guy. He came off really good to me. I mean, he sounded extremely trained in media. Like every time Lex would push him on something like this study said this is bad for teenage girls about Facebook, he would say, well, you got to look at the full context of the studies. And we were studying it because we want to help people. And by the way, when we studied it, we found that Instagram actually helped teenage girls. And you're just like, what? But he is trained at media. That was one of my takeaways.
Sure. He had some like clearly thought through, I don't want to say canned, but nearly canned answers for a number of things, which you have to come to expect at this point. The guy's literally called the Congress like every week, so he has to be on his game.
No, Lex is a straight shooter. I like his interviews.
Oh,
I was thinking the same thing in the interviews. He's very monotone. I wouldn't call him robotic, but he's very monotone. And then put him next to Zuckerberg, and it is just kind of funny hearing them talk back and forth.
I need to watch that now. That's going at the top of my list.
It was a pretty good interview, I must say. Granted, you have the drawbacks of
Brad, if you
Mark needing to be politically correct on what he's trying to say, but
if you do a breakdown on that one, like a recap, I think that video would do. It'd be fun to see how that does compared to some of the value investor videos.
Yeah, I can put on my my robot voice as well for that recap.
And in the thumbnail, if you wear some kind of VR thing, that would definitely help it take off.
That would make for a good Brad video.
Excellent.
Brad breaking down interviews, always good content.
Great.
So that's Facebook.
Have you guys seen Carvana? What it's been doing? It's just been my gosh, like
a knife.
Yeah, if you ever want to see something funny, look at Carvana tweet like something really positive, and then look at the comments that come back from people.
Carvana's on Twitter, huh? They've got a.
Oh yeah, they're very active and they're very bubbly and they're very like let's celebrate this, let's celebrate that, and then you look at the comments and it's like, oh my gosh.
Well, they've got some regulatory issues that they're working through right now, right? That I haven't looked into it much, but I read something briefly about something with how they don't have like proper title over the cars when they're selling them, but they need that in like the state of Texas. Or
if you read the
like
comments, there's people that are saying, and this is people that are saying when they've bought cars, they've had issues where like they didn't get the title paperwork right, or they got a car in a different state with the title, or
gosh,
but as I don't know, the bulls on the company would say they're doing a really hard thing, and hard things are hard, and when you do hard things and you figure them out, you've got a moat. So I guess that's the bullish.
It's an audacious plan that Carvana has, I would say.
It's not just Carvana. There's other companies selling cars online. There's
Vroom, right? Vroom.
No. There's real players. There's well, not that they're not. It's just that they're.
Sorry to any Vroom board members.
Haven't heard a lot about Vroom lately, but what I meant by that is Vroom is my understanding they're like in the same exact business. What I meant is like there's car dealerships with like huge market caps, huge histories in the business now, slowly
and influence,
but smartly adding on online sales, and of course there's CarMax as well. But yeah, that stock price has, oh my gosh, Carvana's been totally hammered.
We're down
55%. Give us the 1 year, Jack. Give us the 1 year.
1 year is down 64, but 56% over the last 2 months.
Yeah, like, six months is down 69%.
Nice.
5 years, you're up 830%. So shut up.
Just been it's been fire.
Yep.
Brutal recently for sure.
Yep.
So have you guys talked about oil at all? Did Brad bring up oil?
No, we haven't talked about oil. We talked about the salad oil scandal. But that's it.
I briefly mentioned commodities in general when we were talking about the Ukraine situation, but we didn't really go into detail.
Warren Buffett, Berkshire Hathaway. I don't know if it was him
Chevron.
Or one of the. No, so they have the Chevron bet, but it just came out after hours today that they own with their warrants 11% of Occidental. Yeah, a big. I think they're in the Permian, and so they've made a huge bet. Not a huge bet for them, but a big bet on an oil company. And then if you look at that company's stock year to date, it's already doubled, I think, or it's up 81%. And so they've been buying it throughout this quarter. I've got a couple holdings, Podevco and Ring, and what was interesting is today they were finally up on all this news and oil going up, but what was weird is all week long I was watching oil just go to crazy high prices, and some oil stocks they just didn't move at all, which was kind of weird, but that's starting to change. And then I tweeted out something from Financial Times. I haven't read it yet. I need to read it tonight, but Scott Sheffield, he's the CEO of Pioneer, a big oil company. He's saying that crude oil could hit $200 a barrel if there's a Western energy embargo on Russia, and
which we don't have yet.
Which we don't have yet. And I'm a big follower of politics, and obviously we don't want the show to go that way. But I'm just bringing this up because it's about oil. All the news on the political shows today was that the left and the right are pressuring the White House to stop buying oil from Russia for our country. And the White House is trying to figure out ways to get a supply of oil that would make up for that. This guy, Scott Sheffield, is saying you can't, basically. But the White House has been the one kind of party in our country that's been hesitant to do that, obviously, because if they stop doing that, we're going to have a lot of high prices in this country and a lot of inflation from that oil. And it's going to go to a crazy number, and that's tough to do, whoever you are, if you're sitting in the White House.
And it's not just the U.S., by the way. There's a lot of countries are still they're doing sanctions around everything except buying energy from Russia, because inflation is a political killer for anyone. So what happens there will obviously have big implications, definitely in the short term, and we'll see what happens in the long term. Though I do kind of wonder, there's almost I don't want to call it euphoria, but there's a lot of energy and I didn't mean to. There's a lot of energy going towards energy.
Well, you know, earlier in the show, Jack, you used the word violence in a very
I recognized that when I had said it. I'm like, I don't want to make a joke.
And then I didn't make a joke because it obviously wasn't intentional.
Yeah, but there's a lot of
you can't stop yourself. You're just a pun machine. Yeah,
it just happens. It's total natural.
You were saying there's a lot
of I'm wondering if now that oil's cracking $100 a barrel, someone's saying $200 a barrel, are we now approaching euphoria territory with oil?
No, we are still in a depressed oil market in this country.
Sure.
People hate oil. There's just institutional pressure against investing in it. Shareholders, investors without any inclinations to invest based on like their social issues and stuff and environment, they've hated oil because they got burned in the mid 2010s with the shale production growth, and no one got cash except the managements. So that, and the companies in this country, the public ones, they're still not growing their production. And there's even a weird thing where like they've got a little beef with the administration. They don't feel like they're being treated the right way, and now they're being asked to save everybody. So we're not there yet. We definitely will get there. If oil prices stay above 100, people will drill, and everyone will start making a ton of money. But we're just not there yet.
Yeah, there's the blowback against production that's gonna be a big. When you can't bring on the supply that you need relative to demand, you're gonna keep getting higher prices. But I hate to interrupt, but I would love to interrupt because we got a super chat. We got a super chat from Jonty.
Yeah, but that's not 10. Jack.
What?
I thought you had a threshold on Australian dollars. They had to be 10 because they're so weak.
Yeah.
Oh, I'm sorry. Yeah. I thought with inflation and all that we were at 10 for Australia. But no, I'm sorry.
Yeah, we were considering implementing that, but we decided not to. But he asking about Micron.
We haven't talked about Micron
in quite some time. Have we really ever talked that in detail on Micron? I don't think we have.
I don't think too much about
it's
Micron.
It always kind of floats around the value space. A bunch of people have it, and then we
that's exactly my experience as someone who's had like a 7 to 8% position in Micron. I just sold a little bit to bring it down to like 5% because I'm in it. It's a shameless clone. I don't think that much about it. I don't really know what the deal is there. I know people say that they're in demand and there's not a lot of competition and that prices are going to stay high and they're going to make all this money, and kind of still waiting for that. But that's where I'm at with it.
Jonty, what would you like to know about Micron? Just throw out a follow-up to that one.
I would want to know.
I put a link regarding that announcement a little higher up, so hopefully you can open that.
Is it more of a tailwind sort of thing, and just in?
I think Monish has said something to the effect it's like a tax on cloud, or it's a tax on the internet.
Data centers, yeah.
I don't. I looked at Intel recently, and what I said is that when I looked at their presentation, it was like reading Spanish for me, because I understood a little bit of it, but not enough. And I kind of feel the same way with Micron. Karan, are you in Micron?
Jason, what's your largest holding at the moment?
Races. Well, it fluctuates like a lot of things fluctuate
in dollar terms,
especially when you have races. Yeah, it's going to fluctuate.
But I've got kind of a big four. I've got races. I've got Ring Energy. I've got Prosus, and I've got Apple. And just so everybody knows, I'm up a lot in Apple. Okay, I know you can talk about races, you can talk about Prosus. I made a lot of money on Apple.
So did anyone who owns Berkshire as well.
Yep.
So yeah, those are my big four, and those are kind of the ones that I don't really sell to buy other stuff. And then it's weird. Those are my big four. Then I've got this mix of another 3 or 4, like what was Change Healthcare. I sold it. Podevco, Micron, Green Brick Partners. Those are kind of the ones where I'm willing to sell if I see something else. I got a pitch for you guys, by the way, whenever you want to get to it. I need help. I need your help. You great roundtable of investors. I'm thinking about buying a company on Monday.
Wow.
So
okay, what's the company?
All right.
I need permission from the host here. Is it a good time?
Well, Jonty did ask if, just to respect his generous super chat, if anyone has done an intrinsic value calculation on Micron. Seems like there's a lot of growth that you'd have to predict in there, and that would make it kind of difficult.
It's pretty shameless. It was a shameless clone, Jonty.
Yeah.
And
it is strange because it's one of those like more techie investments that a lot of our value camp likes to steer away from. That's why I always find it kind of funny how that's always in there. Not always, but often in portfolios.
There's quite a good discussion on Micron on this channel called Value Investor TV. VITV, I think it's called.
That's it. Yeah, that's the one I was going to point to.
Sunil, someone.
Yep, Sunil Shah. Yeah, check
He's
out
got
his.
write-ups.
He's got a couple of videos on VITV.
All right.
And he goes in depth into what he sees as the prospects for Micron. And I think he was buying around the same time as Lilu was. So
Something we should all remember is somewhat cloners. I think Lilu and maybe Monish, weren't they buying Micron a lot when it was like at 30 or 40 versus today's prices?
80. Yeah.
and that's when Seth Klarman was selling, I think, around the same
Interesting.
price.
At 30 or 40.
Yeah, I think Seth Klarman was buying around
Well,
like
he got
6
in
or
at like
8
10.
or something.
Yeah, below 10.
Yeah.
So
I think Sandeep kind of summed it up there. He says it's moving from cyclical to structural. I think that's kind of the bull case on Micron. That
right.
my understanding with what they sell, the memory, it was very cyclical, the prices, and now it's not going to drop as low, I think, is what the bulls say, or when it does drop, that Micron's still going to make money. So
Right.
All right.
Yeah. Shashi and Rohan, hit me up on Twitter. I'll try to get you that announcement.
Well, thank you, Jonty. And
Yes, thank you, Jonty.
thank you, Jonty. I don't know if Jonty knows about my jokes with Frank in Australia. I didn't mean anything by it.
yes. Your money's always good here. I think to wrap up, Jason, maybe you can give your pitch, if we can call it that, for what you were looking to potentially buy on Monday.
Well, I'm kind of looking for you guys to kind of slap me in the face and tell me if I'm crazy or if what I'm seeing is kind of true.
That's my favorite thing to do. So let's get into it.
Can we guess what it is?
Yeah.
Ooh.
Hold on, Karan. I didn't hear you. Your screen froze up, so I didn't hear what you had guessed.
Is it Zim?
No, it's not Zim.
Okay.
I was going to say there's a 0% chance you will be able to guess what it is, but that was pretty darn close. It's one of Zim's
suppliers,
yeah. And or customer, I'm not sure. But anyway, there's a company called Navios Maritime Partners, LP. And they're selling for about $1 billion market cap. They've got about $1 billion of net debt, so their enterprise value is $2 billion. They are a shipping company. They're in 3 different spaces in shipping. They're in container shipping, which is what you would think of when you think of shipping, that all those stacked up boxes, which prices have just gone through the roof during the pandemic. But they also have a line of vessels that are in tankers, like oil and chemical and stuff. And then they also have dry something, I forget what it's called, but they have dry goods or whatever, where it's like stuff like grain or coal or whatever. You just fill up a ship with dry goods. So they're diversified in the sense that they're in 3 different areas of shipping. And the prices, by the way, for those 3 areas of shipping are very different. The other 2 areas are not at all-time highs. And they're run by someone with a long history and a long family history in the shipping industry. I believe she's from Greece. The company's based in Monaco, France. And they are the largest shipping company that's listed in the United States in terms of their fleet size. And they're like number 6 in the world. Getting to the interesting stuff here, if you look at Seeking Alpha and you look at their earnings, they're selling for a PE of less than 2 on this year's earnings, 2022. And they're selling for a PE of less than 2 on next year's earnings. They have $2.7 billion of contracted revenue. A lot of that revenue, $2 billion of the $2.7 billion, comes from very large companies. And
contracted over how long? Sorry, does it say?
Yeah, they have a schedule on their. I think one more interesting thing to pull up would be their presentation, maybe, if you guys want to go that deep. But they have a schedule for that, Jack. A lot of it is in the next year or 2, but it does go out to 2027 and beyond. 400 million of it is 2027 and beyond.
Okay.
And they also list the value of their vessels, and apparently vessels could. The ticker. Oh my gosh, we're looking
I've got
at
it pulled
ticker.
up right here.
Yeah, it's called. Someone left a comment. NMM. And
pull up the 10-year price chart, Jack.
Sure. Oof. What happened? I
Now
wonder.
that might not tell the story. It might. I'm not sure. There's apparently at some point there were 5 or 6 public companies that had the word Navios or something mentioned in them. So it's been a very confusing structure
Sure.
for the market. But now they've consolidated those, except for there's one other one out there that's very small. Apparently the price of vessels is kind of like, I think it's kind of like a known kind of commodity, a known kind of public price that fluctuates. They list the price of the value of their vessels is what I should say. The value fluctuates, and it's kind of like a track thing. I think they put the value of their vessels at $5 billion, and the debt, I believe, is tied. It might even be tied at a vessel by vessel level. I'm not sure, but they value their debt is like 1.5 billion. And so if you take the current value of their vessels minus their debt, it's like $3.5 billion of value. The company is selling for $1 billion, and they might earn back the entire market cap over the next 24 months. And they also have a lot of open capacity that's not fixed on the non-container stuff. And they talk about like this year about like maybe a little over half, like 54% or something like that, of their vessel day-by-day capacity is contracted out already at rates that are locked in, but like 40-something% of their capacity is not. And they say like of our 54% of revenue that's booked, we already cover our expenses. And so, so it's a very, very interesting situation. The other factor is in the shipping industry, it's very volatile. I've been talking a lot about this and on YouTube, and I've been getting a lot of people around the world that have been educating me on the industry. And they said, hey, you got to be careful with vessel levels. Just like the rates change, like the day rates and containers through the roof right now, those rates go down. We've seen Monish talk about this with Frontline Shipping, and there's videos out there. And when those rates go down, the value of the vessels go down as well. And so those do fluctuate. It's not like that 5 billion could just stay 5 billion. So you got to be careful.
The value of the vessel is really linked. It's like a cap rate, almost like a rental property of sorts.
Exactly.
And it's tied to income.
It's tied to income, and the rates actually do change in terms of what you can sell those vessels for during bad times.
All right.
So it's a very cyclical industry. In part of the industry, we're at all-time highs right now. The question is, are those rates going to come back down? Everyone seems to think they are because of it's all pandemic related. But how far down are they going to come? That's a question. And when will that happen? That's a question. The other interesting thing about this company is the CEO. Angeliki, I think is her name. Frank Wow, I think, if I'm pronouncing that right. You can look it up there.
Something tells me you're not, but that's okay.
Brad, respectfully, I've spent the last 72 hours of my life living in this company, like just all day long.
Good.
I've been obsessed. Yeah. So, Angeliki, I think that's her name. I watched two recent interviews with her. And she strikes me as a person whose brain is working. Cool. A lot of people's brains aren't working in this world. She sounds like a rational person whose brain is working. And the big deal with her and the industry is it's a very cyclical industry. Private ship companies do well. Public ship companies have not done well because shareholders want their money. They make money in good times and they want them to pay out huge dividends. Her point is, if you do that and we pay out all the money, then when things go down, we're not going to be able to take advantage.
There's no cushion. Yeah.
There's no cushion, and our loan to value is going to skyrocket, and we're going to have trouble with banks, and we can't take advantage of the downturn. And she says, no, we're diversified this company into 3 different lines. We're going to keep money in-house primarily, and we're going to grow this business because it's all about scale, and we're going to take advantage when there's blood in the streets. And I love that strategy. Some of the market hates it because they're not going to get their big dividends like they can with some other companies in the industry. But I've fallen in love. And I've rationalized that love, saying that I could buy this company. We can earn back the whole investment in 2 years. It's protected on the downside with that vessel value versus debt. I know that can fluctuate. Maybe it's not protected to the extent I think. But then after that, I get the company for free and I have got a good manager. I've fallen in love, but that's the situation. I don't know if I'm going to buy it yet. Matt asked, and then I'll shut up. I read an article. He asked, how did you find it? I read an article in the Wall Street Journal about shipping rates being the current thing that might drive inflation. And then they mentioned some names like Maersk, the biggest company. Mm-hmm. And then I looked that up. Then I looked at peers on Seeking Alpha, and I had the thought, why don't I just look for companies in the space that have like hardly any debt? Then I found this company called Zim. Then I got all excited about Zim because like it just looks like it's at a crazy low PE and they're paying out huge dividends and they're making a ton of money. But then I saw this other company, Navios, and I fell in love with Angeliki.
My quick question would be, how much do those ship values swing? Like, are we talking about like it could go down to a third of what it is now, or like a 10% drop? Like, what are we really talking about? If
it ain't 10%, my not only, by the way, not only is it like you have these asset values change, but they cost a ton of money apparently to keep up. It's not like a moving truck that you can just go park somewhere. They cost a lot of money to keep up. Sure. And my sense is it can get brutal in this industry. And Monish talked about it with Frontline. He said rates are high, so then they contract for new ships, and it takes 2 to 4 years for those ships to be built. Then they hit the market right at the time when rates are coming down, and then it just brings on even more overcapacity and
boom and bust.
Yeah. Sure. So,
have you read The Shipping Man, Jason?
No.
That's one that Pabrai recommended for understanding the shipping industry.
Oh, I'll have to look for that. I'm gonna get that tonight.
Awesome.
I've got an Amazon gift card, so I'm gonna.
There it is. You know how to use it now.
Wonderful.
We've got a super chat, Jack.
Yeah. Yes. I like the pitch, Jason. That's enticing. So
I mean, Jack, you love the deep value stuff. I know you do. So
of course, yeah, cheap.
But
cheap
what about the wonderful business owners, Brad and Karan? Do you guys think I'm crazy to get into the shipping, to dip my toe in the water?
I have no idea about shipping, so like I'm just going off what you just told me, and it sounds good.
Hey, from my perspective, as long as you learn something, Jason, it's not a loss, even if it doesn't work out.
Right.
Okay.
Let's get to the super chat and then we'll wrap it up here from Aaron. Thank you, Aaron. A question for all: when deciding on investment allocation, do you choose a stock portfolio percentage or net worth percentage, or either?
Depends how much I want to rationalize my investment decision.
Jack's got most of his wealth in his house, right, Jack? So that would skew.
Well, houses, I suppose.
There you go.
Yeah, let's see. So
that was a flex for those
stock
of you who don't know how to recognize.
my stock portfolio is, if you include my retirement accounts, I think is around like 150 grand. But then if you add up all my property values, they're like 600-ish. But then there's debt on the properties, obviously. So way more of my portfolio risk is technically in real estate, just on a dollar amount. Plus you get the debt there as well.
Jack, when you do hit that million mark and it's all public, everybody including me, we're all just going to be asking you for money because we know we'll know you have.
I'll be like,
I don't have any. Literally,
I don't have any. It's all tied up in properties. Like I don't have any.
Take out a HELOC, Jack. Take out a HELOC.
Pay my people with debt. That's sustainable. Dividends on debt. Yeah.
Low rates. They're low.
I had a question actually on my recent episode. Was like, how, basically asking like friends and family seeing this, like, are you comfortable with that? I'm like, well, kind of have to be if I've been doing it for a while now. And so far it's people have been very supportive. Anyone who cares is supportive, and anyone who doesn't care, well, they don't care. So it's I haven't had any negative feedback to this point. And frankly, if anyone were to really like be rooting against me, we're probably not friends at that point. So so far it's been good. We'll see. I think I responded to that comment saying like, we'll see what happens when I'm a financially independent supervillain, and if anything changes. We'll see what happens then if I change my character. The morally reprehensible,
right, Jack.
So, but to answer the question, right now, my investment allocation largely depends on how much cash I have available, which is it's cash in, cash out to pay for investments right now. So it's kind of whatever's on hand, and occasionally I'll trim positions if I really want to add to one and I don't really care about another. Like Equity Commonwealth is one that's pretty much just a cash pile with some potential equity upside. And I'll trim from that first and then move into something else if I don't have any cash available. But I don't know if that answers the question, but I don't really think too much about like, oh, what percent of my net worth is this, at least yet, just because I'm constantly adding still. I'm sure that will change as the portfolio grows.
How about you, Karan?
Yeah, I look at it as stock portfolio percentage. The only company I looked at it as a net worth percentage was GameStop, and that was pretty much it. No, it's just stock portfolio.
That was a big swing at the time.
Yeah, it was like 40% of my net worth. So
wasn't it like a couple years salary, if I remember correctly, at the time?
Yeah, whatever savings I had were in it. So
And then this was before the whole meme stuff.
Oh yeah.
Yeah, this was like in August around.
What was
6-7 months.
What was the margin of safety, or what did you? Because I know you always think about the downside.
Well, the cash was higher than the.
Was
it
a cash play?
Completely, yeah. So they had enough cash to pay off the debt plus buy back the entire company, and
wow.
And they had bought back like 1/3 of the shares outstanding, and plus short interest, everything, all that was there.
I see some selling for net or for less than cash companies every now and then when I'm looking, like every now and then. But actually more than I thought I would find. But what always worries me is when I see losses associated with that as well. Mm-hmm. It's kind of like you don't know how long that cash will be there.
They're just going to bleed it out, right?
Yeah.
Yeah.
But then the apes came.
So I kind of take a Berkshire Hathaway approach. I even keep cash out of the portfolio, if you will. Berkshire keeps their cash totally separate, and it's to pay off any insurance problems that could arise. And I kind of look at my own life that way. Like I've got stuff that could happen in life at any time, and I want to have cash around. And so I very much focus on like a stock portfolio and like stock in the full word there position. And sometimes I would want to have more cash in that portfolio as an actual percentage position in there. But I just, the more I've kind of learned about investing in the last couple of years, the less I've been tempted to do that. And I've been more fully invested. And the more I listen to like Warren Buffett and guys like that talk about, especially their early days when they had a bigger universe to invest in, it sounds like it was very, very rare for them to have a lot of cash built up.
Full offense. No need for defense at that stage.
Have you guys heard of?
Go ahead, Karan.
Yeah, have you heard Tom's podcast with Guy? Did you guys check it out?
Yep.
I watch every one of Tom's videos.
It was so good. The way he explained like how he looks at capital allocation, the 5%.
Are you talking about the water up to your knees, up to your neck?
Yep.
Yeah, that really hit home with me. It was a great visual. And I honestly, when I came back into Serritage the other day, I was not comfortable with Serritage at like 7 or 8% or 10% or 12% previously, but 5% kind of felt like water at my knees. And I did think about Guy there. So it was a great thing we learned.
Nice.
And
yeah.
Brad, want to take us home on this one?
Oh, same. I mean, stock portfolio percent. That's kind of how I look at allocation. But I wanted to mention, have you guys seen Phil Town's cash position right now? It's like 50%. And then you look at Munger, who's taken out margin debt. It's funny to see how different
he's got that options portfolio though, so that cash is tied up, right?
Yeah, it's true. I don't know if we can see exactly how much of it is tied up.
It's hard to say. You'd have to do a lot of math to figure out what's.
But
tied up.
I think the options are pretty low. I think he's got a lot of cash sitting there.
Mm-hmm.
So it's just.
And he's got gold on top of that, right? Which is sort of like a.
Gold is in there. I'm including that as like a stock.
Yeah. You could make an argument that's more like cash too, but yeah, cool. All right, guys, we're at an hour and a half here.
Yes.
Thank you, Aaron, for the super chat. Always
Yes,
appreciate
thank you,
it.
Aaron. Thank you.
Getting some more we're getting some more exposure
For
to
the Malaysian
Malaysia.
ringgits. The ringgits.
I think most of our super chats have been in. No, or have they been in Australian dollars? I don't even know.
Non-US currency.
I think yeah,
we could say.
it's been mostly non-US.
But no, not the ones from me. And I think
That's
I've
point.
been funding most
we
of them. By the
we
way.
gotta include you, Jason.
Yeah,
You've had a lot.
I get into the show. It's Friday night. I'm laid back. We're having fun. Ding, 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 ding. Bye, bye, bye. And then like Monday, I look at my
done a super
email.
chat right now and like get your own question in there. That would have been great.
I thought about it, but then Monday I see my emails come in from YouTube, and it's like credit card charge.
I should send a 12 pack to your house. I got to get your address later just to loosen you up a little bit more.
Yeah.
Yes. Luis asking if he can super chat in rubles. That would.
Give it a try, Luis. Give it a try.
If you did it a week ago, it'd be a little upsetting now. But now it's already been destabilized, so whatever. The loss has taken place.
Cool.
All right. Well, thanks everyone. Thank you, Jason, for the short notice coming out.
Pleasure.
Always appreciate that.
Awesome.
And we'll be back next week. We'll see if our guys down under will be back in. Tom's on the house hunt again, so we'll see what happens. We'll see if he has some news from the front. If he ends up
move to Dallas.
Yeah,
Greenberg's got homes for sale.
Austin,
come on to Texas.
Fabri's in Austin, so he's got to go to Austin
or Atlanta. You get some green.
I think Tom was pretty well in Nebraska,
Nebraska.
Otherwise, everyone, please like, subscribe, all that great stuff. Check out the links in the description, including our Discord, which is very lively right now, given all the things that are going on. And yeah, that's all I got. See you, everyone.
Tea Time After Dinner Investor YouTube. I'll be on there tonight, 5 days a week.